once again from ShortMeTina.com with my daily recap. So today is, I believe, Tuesday. Sometimes I get lost in terms of the days of the week, but today's Tuesday, so I want to say happy Tuesday. Hopefully it's a good one for you. And before I get into a recap of the overall markets, I would like to say welcome and thank you for tuning into our video here, our daily market recap. Do us a solid before I get underway. In the comment section, just drop us a quick comment. You can say hi. Let me know generally how you think about my analysis or anything else you feel to say, right? Typically speaking, I usually respond back. Although my response time has been a bit slower, I usually always get back to all of the comments. All right, so right now on your screen is the SPY S&P 500 daily chart dating back to 2017. I actually wanted to wait before doing this video. I wanted to wait until Speaker of the House Nancy Pelosi came out and did her press conference, which she stated that she is now going to move forward in terms of a formal impeachment, keyword inquiry. So it's not to say that the president is being impeached. She's going forward with the formal impeachment inquiry to see whether or not there is grounds for impeachment regarding the president's phone call with the Ukrainian president. I guess they're going to see whether or not his conduct surrounding that phone call was proper. Before she even came out saying that she was going to move forward with the impeachment inquiry, the president, I believe, released a tweet stating that he is going to, on his own, release the transcript so that the public can see, in fact, he did conduct himself in a professional manner. Anyway, so again, I want to say around 5 p.m. Eastern time, the Speaker of the House, Nancy Pelosi, came out, did her press briefing, and I wanted to see whether or not it would affect the markets in after-hours trading. Essentially, the market remains, in my opinion, unchanged. So at least within the immediate reaction, within the first 30 minutes or so, the markets, quote unquote, have not reacted. And so for me, the numbers that I've been paying attention to during the trade wars with China, the numbers that I've been paying attention through all the other investigations that the president has undergone since he's been president, these numbers for me have remained intact. So I'm not going to necessarily let the news sway me. I'm just going to focus on the numbers I've been paying attention to so far. Now I'm going to share that with you right now. All right, so those numbers that I've been paying attention to obviously is resistance now, support of 293 to 295. Again, this chart dates back to 2017, and you can see that 293, 295 zone or level has acted as resistance. You can see it acted as resistance here. Back in September 2018, we shot up to that price point, sold off about 25%. We rallied. Most recently, again, in April of 2019, retested those 293 to 295 level, sold off about 7 or 8%. Then we finally broke through, couldn't sustain that move. We fell back. We actually bounced around those levels in August. The low of that range, you can see it here. It's highlighted. Clocked in around 281.72. The high of that range clocked in around 294. So the high was smack dead in the middle of that range, 293 to 295. And then we finally broke out of that range in September of 2014. Then the Feds issued rate cuts and we've pulled back ever since. Today, if we kind of zoom in, you can see that we went as low as 294.81, almost touching the that upper end of the August range before bouncing. I see a quote of 295.92. So essentially heading into tomorrow, right, we want to pay attention to that low of today, which is 294.81. Are we going to trade up above that, or will we pull back? If we pull back and then we get below 293, might be issue for caution. But if we can stay above 293, I think so far we're essentially good, all right? What else? All right, and so we have the IWM daily chart dating back to 2019. Usually you'll see about a 2 to 3 year chart. Today I just want to focus in essentially on the last 6 or so months of trading. So we're off about 1.4% on the day. I see a quote here of 152.50. For the last 5 trading days, we've actually sold off, or essentially since the Fed decided to cut rates by about 25 basis points, we've sold off. And so let me just give you a quick snapshot of what I've been paying attention to. These arrows essentially indicates the time in which we've actually tried to penetrate that 2-year resistance level, right? You should know that number if you tune in daily, or even if you've tuned in once a week. That number is 160. Even within 5 or 6 months, we've tried to penetrate that level 3 times. If you go back 2 years, you'll see that we've tried to penetrate that level around 7 or 8 times to no avail. So it's really no surprise that we actually pulled back in mid-September once we got to that 160 level. What is very surprising is here for me, I thought, well, again, if you look at the chart from July until present, you had sort of like that basing, that sideways action, right? Then we actually pulled back base, we accelerated. So with this slight pullback here, I thought we were going to essentially base like we did here from July to July. We can say it's what we did throughout July. I thought we were actually going to do that in September as well, base or trade sideways, really not penetrating below that 153 level. That did not happen. We actually plowed through that level today, went as low as 151.84. Again, perhaps on the fact that that Congress is actually perhaps now going to open up a formal impeachment inquiry into the president or President Trump. Again, perhaps one of the reasons why the market pulled back. But then we got that bounce to close at 152.50. Heading into tomorrow, the remainder of the week, I'm going to be paying attention to, obviously, today's low of 151.84. For things to actually look bullish, we should not penetrate that level, meaning that we should trade above it. We should not dip below it. If we can manage to stay above 151.84, I think everything should be okay. Now, if we start to pull back, then I see a scenario where we once again revisit support. And again, if you look at a longer time frame, 2 years, you'll realize that 144, 145 has been support for a while. So that's what I'm paying attention to. What else? All right, so I'm going to speed it up because I took about 6 minutes to go through the IWM and SPY. Right now, what you're looking at is Bitcoin daily chart dating back to around May of 2019. Really quickly, you can see in June, we actually broke through this support level. We can call that around 9,500. And from June until this breakdown, that actually acted as support. So you can see that the market or Bitcoin would revert back to that 9,500 level, but we would always get the bounce, right? You can see it here. We reverted back to support 9,500. We got that bounce. We did it around here. We did it here. So we continuously got that bounce off that 9,500 or so level. Today, that was not the case. We actually came crashing down on volume. Right now, we're off north of 10%, and I see a quote here of around 8,700. Not looking so great for Bitcoin. Obviously, I'm not gonna give up on this particular cryptocurrency or coin as of yet. I remain long, and again, it is a very volatile asset, right? It's not, it can crash, as we can see. 10% in one day I've seen it go down as much as 20-30% within a week or a few trading days. So not to be expected here. What you want to see, however, is very soon and very quickly, you want it to actually get back within its range or back above this one support narrow resistance line or level of around that 9,500. So that's what I'm looking for in the shorter term. Again, getting a little dire here, but I'm not willing to necessarily give up on Bitcoin as of yet, because when it has a tendency to run extremely quickly. What else? All right, and then we have Litecoin daily chart dating back to March of 2019. So about 6 months worth of data, similar to other cryptocurrencies. It seems as though the market is selling off. You see it in Bitcoin, obviously in Litecoin, Ethereum, Ripple, Tron, and the others. So Litecoin is off about north of 14%. You can see back in April, we had that huge move above resistance. Let's call that resistance level around 65. It has held, for the most part, for the last 6 months. Fast forward to yesterday, today, the last 2 trading days, we actually cracked that mark. Yesterday, we cracked it. Seems though we had a bounce today. That break was sustained, and right now we're trading at 57.14. Obviously, going forward, if you're long like I am, what you want to see is for Litecoin to get back above 65. You don't want it hanging out under 65 for too long. I think if that happens, you can start to get a breakdown of confidence. I'm looking for a push above 65 going forward. What else? All right, and then we have ticker Nike daily chart dating back to August of 2015. So about 4 years worth of that. I'll zoom in a little bit. I actually like the setup of this chart. I didn't want to take a trade prior to earnings, so I kind of wanted to see what unfolded. Clearly, stock is up about north of 5% on the day. Earnings did not disappoint. You can see it here, right? The stock consolidated. You had the breakout. Fast forward, you have the consolidation, and right here, today's move is the breakout, trading at all-time highs. We went as high as 92.40. Right now, I see a quote of 91.69. I think that's sort of after hours. So I'm not saying to necessarily jump in here, but you definitely want to pay attention to Nike because it looks like it's ready to run. Again, going back, you have that consolidation breakout. Consolidation looks like it's breaking out, ready to run. What else? Then we have ticker OVID, daily chart. Huge congrats to the bulls. Stock is up north of 25% on the day. See a quote here of $3.10. You can see today it ran right into resistance, smack dead. Let me try to fix that line right there. Boom. Going as high as 348 before pulling back to 310 with confirming volume. Really what you want to pay attention to heading into tomorrow, obviously, is how the stock opens up. If we open up above 310, that's a good thing. Open up below, not so good. So heading into tomorrow, you definitely want it to open up above 310 if this run is to continue, and obviously take out today's high of 348. If we can do that, I can see it hitting 450 to 5 in the upcoming days. What else? And then we have ticker WHLR, another runner on the day. Huge congrats to the bulls. Stock is up north of 21% or 22% on the day. I see a quote here of 168. It's down a little bit in after hours. It's off about 7% in after hours. Anyway, heading into tomorrow, similarly to what I discussed with ticker OVID, you obviously want to pay attention to how the stock opens up. If we open up above 168, that's a good sign. Right? If we open up above 168, we take out today's high of 180, that's great. If we can do that, I can see the stock definitely trading up into the twos. However, if we open up below 168 and can't seem to get back above, be mindful. I can see the stock drifting and pulling back to around 150. What else? And we have ticker CEL up about 21% on the day. Again, huge congrats to the bulls. See a quote here, a close of 251. Today's high clocked it at 256. You can see that the stock went running out the gate. This huge gap up yesterday. We closed at 207. Clearly, it was a bit of selling. Today, we gapped up. Went as high as 256 again to pull back at 251. So we closed relatively close to today's high. Wasn't much range if you calculate the percentage from today's low of 240 to 256. We kind of essentially, in my opinion, closed for the most part exactly where we opened up, which is around 248, give or take. So heading into tomorrow, what you want to pay attention to, once again, not to sound repetitive, but you really want to pay attention to the open, right? If we open up above 251, that is a great sign, especially if we take out today's high of 256. If we can do that, I'm pretty sure that this stock can run to potentially 3. So it's about 50 cents worth of upside. If however, we take out, well, first of all, if we open up below 251, take out today's low of 240, more than likely expect this gap right here of 218 to be filled. So that's my take. What else? All right, and then PT daily chart really quickly off about 28% on the day. It's off a little bit more in after hours, north of 2%. I see a quote here of 163. Again, this is a daily chart. Let's focus in on price action from June to July, because I think once that crucial level was broken, that should have been the writing on the wall. You can see here again from June to September what level is that? That like 230 mark, that $2.30 level served as support for around 3 months, right? Once we got there, we would get the bounce. You can see here, we got the bounce here, got the bounce here off of that 230, got the bounce here, got the bounce here. Once we broke that level, once we broke that 230 level, for me, the writing was on the wall. You should have gotten out right here. And if you had, when it broke that 3-month support, you would have saved yourself from this 28% decline. So today we went as low as 135. So we're some off of today's low. You can see confirming volume. Not a fan of getting into stocks that are trading at all-time lows. So for me, this is a no-go. I see further decline. If not tomorrow, definitely within the upcoming weeks. What else? All right, so let's wrap it up and round it out with ticker BB BlackBerry. It's daily chart dating back to 2012, so about 7 years worth of trading data. Off about 22% on the day, so huge move to the downside. Stock has actually been trading within a range. You know how I love to trade channels and ranges. They're very easy, in my opinion, to trade. And definitely if you join ShortMeTina.com, I go through for free how to actually trade these patterns. Anyway, let me talk about it for a little now. So you can see that it's been trading within a range, 2 points. The lower end, we can say that clocks at around $5.75, $6. The upper end of that range, let's say, clocks in around $13. So that's a huge range, right? And if you played it, you could easily have gotten 100% gains or returns. Anyway, so trading within this range for about 6-7 years is a long time, and for me, it kind of solidifies or validates that range. Today, fast forward off about 22%, we broke that range with volume, going as low as $5.73. We've since bounced to close at $5.81. So heading into tomorrow, if you're a BlackBerry long or looking to get long, what you really want to do is you want to see this actually get above and sustain a move, right? You want this to get back as close to that $6 mark as possible. Get right back within that range. And if it can do that, then if history is an indicator, it should make its way on up to about 13.14, all right? But right now, a 22% move, that's huge. So I wouldn't jump in necessarily right away. You might want to wait until the dust settles. And that's my take on BlackBerry. So that's it. Tina here once again from ShortMeTina.com. If you enjoyed any portion of this video, I'd like for you to do 3 things for me. 1, comment in the comment section. What do you think about my analysis? That's the first thing. 2, I do videos Monday through Friday. If you want to be notified every time I upload one, make sure you are subscribed to our YouTube channel at ShortMeTina. And lastly, my friend, I've been trading for well over 15 years. If you think you can learn anything from me, then definitely head on over to ShortMeTina.com. Sign up, become a member. Thank you for listening, and as always, thank you for the support. I'll talk to you tomorrow.